Hi and welcome to Swissco's Daily Market Talk. It's Monday, December 30th, the last Monday of this year. Trading volumes are thin and they are thinning. The markets are quiet. The US stocks couldn't benefit from a Santa rally last week. Remember, the technology stocks there see limited appetite this end of the year, and the disappointment over Squid Game 2 of South Korea doesn't help improve the market mood either in these slow news flow sessions. So last week ended on a positive note for the European stocks and negative note for the US stock markets. Interestingly, Santa was more generous with Europeans this year and much less with the US counterparts, and especially the US technology stocks on the Christmas week. So Friday saw the S&P 500 dive more than 1%, while the Stoxx 600 index in Europe closed 0.67% higher. So it's not really a good thing to drive big and major conclusions in such a holiday shortened and thin trading volume week. But last week's price action on both sides of the Atlantic Ocean looked close to the narrative of rotation from the technology toward the non-technology pockets of the market that many investors out there expect to be the theme of next year. And they may be on something actually, because with or without the help of Santa this year, the US stocks will end the year 2024 with the biggest gain since 1997. And the expectations got obviously so high for the AI related companies of the US that it will be quite hard and increasingly harder to satisfy them. Now, in numbers, the big tech companies are expected to eke out a 30% earnings growth next year, which is great, obviously, but Bloomberg economists warn that the pricing of the S&P 500 companies implies a growth figure closer to 40%. So if that's the case, if the earnings don't match the market expectations, it will be obviously hard for this AI technology rally to continue at this speed, meaning that the Batman stocks, yes, with 2M and 2A, and that apparently stands for Broadcom, Apple, Tesla, Microsoft, Meta, Amazon, Alphabet, and Nvidia. I just saw it this morning. Well, they could take a breather. Technology investors are already out there and looking for the next big theme to invest, and the name of quantum is increasingly pronounced in these technology discussions. And Defiance's quantum ETF has broken above its long-term ascending channel top recently and gained up to 30% since the beginning of this month of December. And one of the main catalyzers of the latest quantum rally was obviously Google's announcement earlier this month that it made a significant progress in quantum computing. Remember that, with this new chip called Willow. So that was just at the start of this very month. And that Willow chip demonstrated the capability to solve very, very complex problems in under just 5 minutes. A task that would reportedly take current supercomputers an estimated 10 septillion years. Now, one major issue with this quantum space is that this technology is not ready to be broadly commercialized just yet, and that's a problem because that means that the rally will certainly remain speculative and not necessarily backed by massive earnings number as the AI rally did, for example, with Nvidia's quarter after quarter impressive sales growth figure. So it's going to be a bit speculative, but it looks like it is the next thing or the actual thing that technology investors are looking at. Anyway, we will see how it unfolds. But now, coming back to our traditional technology and AI stocks, I don't have an index for Batman, but Magnificent 7 stocks lost more than 2% on Friday's trading session. Netflix wasn't an exception to that bearish trend, as the new Squid Game 2 made a less than ideal debut with just 64% rating on Popcorn Meter on Rotten Tomatoes. It's a very, very low rating for a show that's first season actually saw a historical attention from Netflix watchers around the world, became the Netflix platform's most watched show at its launch with over 142 million member households viewing it within the first 28 days. And obviously, the show helped Netflix add millions of new subscribers to its platform. So the disappointment of the second season not only weighed on Netflix shares but pulled their related Korean shares lower as well. Dexter Studios, for example, sank 24% on Friday and is down by another 5% this morning in Korea. And well, South Korea continues to sit on the headlines these days beyond a lackluster tension for Squid Game 2. The political shenanigans there are now topped by a deadly airplane crash that costed the lives of 179 people. So Jeju Air, which is the airline company, well, tumbled at the open this Monday, even though the losses there were partially recovered at the time I'm talking here this morning. And beyond Korea, well, Asian markets opened the new week on a negative note. The Japanese Nikkei index and Australian stocks were offered this Monday's trading session with trading volumes nearly 20% lower in the Japanese market and up to 55% lower for their Australian peers. And futures right now are pointing at quite an unappetizing start for the last Monday of the year, both in Europe and for the US, and the price moves that we could see today and tomorrow could be exaggerated, obviously, with low trading volumes. So I saw actually an analyst somewhere write that some investors will be out and reshuffling their positions, their portfolios before this year ends. But I generally think that most institutional investors, most big money are just away for their holiday and they have done their reshuffling, their portfolio readjustments earlier this month as the last day of the year is probably not the best time to make big executions or big reshufflings with super low market liquidity and trading volume. So I actually believe that this year will gently die out this way and we will see what happens next year. In the FX markets, well, the US dollar index is up and down since this morning, but it's just up right now at the time I'm talking here. The major peers are slightly down. We have a light economic calendar until Thursday this week, so it will be quite hard to base any price movements that we are going to see on the economic data flow. So this morning, the euro dollar is seeing resistance into the 104.35 level, while cable is offered into 1.26 mark. The dollar yen continues to flirt with the 158 resistance as traders there and the government officials in Japan are getting caught up in heated debate. The country's finance minister, for example, I'm not going to try to pronounce the name, said that the Japanese government will take appropriate steps against excessive moves in the Japanese yen. Whereas the Bank of Japan members kept the possibility of a potential interest rate hike on the table for January meeting of BOJ during a live discussion. Now, funnily, the latest remarks that came out of this latest live session weren't fully in line with what the BOJ governor, Mr. Ueda, suggested earlier this month during the announcement of the latest BOJ rate decision, where he actually said that the Bank of Japan needs time. It needs time to understand the implications and the risk of Donald Trump policies, and that the letter could eventually take until March or April next year to become clearer. Now, note that some economists out there say that if the Bank of Japan didn't take action this month on its rate policy, well, it wasn't only because of Donald Trump and his international policies, but it's also because of, well, Japanese domestic concerns over political backlash between Mr. Ishiba's minority government and, well, the opposition in Japan on budget and tax reforms. And obviously, an interest rate hike from the Bank of Japan is not necessarily welcome in the middle of these budget discussions. So it's quite unclear right now if those uncertainties will be lifted in time for the Bank of Japan's next policy meeting that's scheduled for January 23 and 24. But the Trump excuse will obviously certainly hold for a few more months. And until then, the dollar yen will probably continue pushing higher with obviously an increased risk of a direct intervention from the Japanese officials approaching the 160 psychological mark, which will probably be that line in the sand set by the Japanese officials to halt the Japanese yen sell-off. So this is all for this Quiet Monday. I'm İpek Özkardeşkaya and thank you for joining me and thank you for all your beautiful and supportive comments. I hope this episode of Market Talk has been helpful and it has been insightful to you. So please do not hesitate to leave your comments, your reactions and your questions below as usual. Follow us on Instagram, on X and on LinkedIn for regular market updates. Subscribe to our YouTube channel for daily market comments and please don't forget to hit the like button on these videos to let us know that you enjoy them. So I will meet you again tomorrow for the last time this year. And until then, good day trading.